95% of traders lose because they chase price. This is the one chart pattern that institutions use to trap retail traders. And in this video, I'm going to show you how I profit from it every single day. Hey, my name is Forrest. I'm a day trader. I invest in stuff, and I think you should too. If you're ready to become consistent, I'm hosting a free futures webinar on October 30th. Click the link down below. In this video, I'm going to show you how imbalances in key POC areas can allow you to snipe entries, and this is exactly what institutions are doing. So watch along until the end of the video. Let's go ahead and look at a real example from just a few days ago. This is a trade that I actually took. Okay, so I have TradingView open here. Now, if you're new to my channel, okay, I have a few different colors going on here, nothing crazy. So the down candles are the blue, the up candles are in white. And then I have really just two indicators on my screen, and they are two different flavors of the volume profile. The one on the right gives me a volume profile for everything on the screen, and then there's a bunch of these periodic volume profiles, which are the session volume profile. What I first want to do is actually go to the daily chart. This was a day trade that I took based off of the daily chart. I'm going to go ahead and toggle off the session VP, and we're just going to look at this big old chart right here. Now, there's a few things that you might notice. There's something very curious and almost obvious right here. Okay, I just made this big green arrow. There's a node sticking out, and we can see that it actually supported the market. The market came down and it almost bounced right off of this thing. Now, in hindsight, it seems pretty obvious, right? Like it's right there in front of us, and you might be having this like epiphany right now, like, wait, why didn't I see that before? And this is the thing that institutions know. They know where you're positioned because they're the brokers. They're the ones making the market, but we can see it too. That's why I use the volume profile. That's why it's the only indicator that I use. So what we're going to do is we're going to use the replay tool, and we're going to see how we could actually get into this trade ourselves. Now, there was actually two setups on this day. You could have shorted into this level down here at 24,800 and some change. Let's just call it 24,800 just for a round nice number. Or you could have waited for it to get to this price and taken the long. Both were valid. So Sol actually took this short. He made a nice little 30 G's on this day. I shorted it. We're just actually pretty low leverage. And then my actual trade was on the long side. So I had a nice long out of this. Again, it doesn't really matter so long as you see the setup, you see the thesis, and you actually take the trade. So let's use the replay tool and see what we could have seen a few days ago. Now, really important here. We're going to go to the 24-hour chart because this indicator, for whatever reason, won't work otherwise. I'm going to go to my visible range volume profile. I'm going to go to the settings, and we're going to add the POC on here. Now, this is the point of control for the visible range. It's this big white line in the middle of the screen. Let's actually go ahead and modify it and make it red just for the sake of this video. So we have a point of control that the market very clearly bounced right off of. Now what we want to do is get our replay tool. All right, so we're back in time on, looks like it is Monday, the 20th of October. Okay, now there's a few things that could happen at this point in time. Now we're in hindsight, we all know what the market did, but as it starts to come off, we need to figure out a few places where this might bounce. The volume profile tells us how many people are positioned at every price. This is a bar chart. You can imagine if you flip this thing on its side and we took the volume that's on the side of the screen and put it on the bottom of the screen, that would be the volume or the number of people at each one of these prices. And the point of control, right, the reason that we call it the point of control is that it is the longest lever, okay, across the auction for this period of time. And all that means is that the most amount of people for all of the data that we see at this screen on the screen right now are positioned at this red line, and that price happens to be 24,814 and some change. Okay, could be off by a tick or two. Now, I'm a day trader. I'm trying to find a really good price. I'm looking at a 24-hour chart, even though I'm a day trader. And this is something that's going to blow most of your minds. You don't need to be looking at the 1 minute, 3 minute, or 5 minute chart to take day trades. I tend to be like a swing trader, intraday swing trader, even though I do day trade a lot. A lot of my day trades are based off of these higher time frame setups. So what we want to do is we want to advance a little bit. So we'll go ahead and hit the play tool. that went ahead very, very far. So you can see that it played out the next bar. It came down and it tapped this price right down here, right at the POC. Now, why did that happen? And how do institutions use this against you? And how can you use it too? Well, when we know that most of the people are positioned at a price, we know where the market is most likely to react. And you don't need to overthink this. Whenever I say this to people like, well, Forrest, can't people suddenly show up at any one of these prices, right? Yes, they could. And that does happen. I'm not saying that that doesn't happen. Okay, what we're really talking about is like fundamental changes in supply and demand, but we can't anticipate sudden random changes in supply and demand. What is an example of something that could suddenly change the overall shift in supply and demand that would make people make decisions outside of their original cost basis? I don't know, something like a war starting suddenly, right? Or an institution suddenly going under without anyone expecting it to, right? Or someone suddenly dying who's leading a company, right? And the company's brand is heavily tied to that person, whatever it is. But that doesn't happen most of the time. And it's not something that you should speculate or trade around at all. The easiest thing to speculate and trade around is knowing where someone is positioned. If you know that I bought a car for $100,000 and I'm trying to sell it, and I'm trying to sell it for 120, then 110, then the market's getting closer and closer and closer to my entry, I might just undercut it and let it go for 99,000 because I want to get out of that car before the market gets down to 98, 97, 96, 95. You know what I mean? And people do the same thing with their positions. You're probably thinking, man, I do that all the time. I'm always trying to get ahead of price. And that's how you end up with sell-offs and things like that. So this point of control becomes an amazing entry point. Let's go ahead and go back to this day right here. And what I would like to do is, if I can go to the 0.1x on this, let's go ahead and advance a little bit. And it just went too far. There is no slowing this thing down. Apparently the chart replay hates my freaking guts. Doesn't really matter. So the point is, I took this long, okay, at this price. And by longing at this price, you can see that this was about, let's go ahead and get our measuring tool. Okay, if you just took a long off the point of control, all the way back to all-time highs, 515 points. Now, I didn't make 515 points just on that one trade. I did capture a couple hundred though. If you captured the full move, you're doing about $10,000 on one NQ. Most of you aren't doing $10,000 in a month, and you're trading 3 to 5 NQ. That's a fact. Now, what's really powerful about this is that I used to use a ton of different indicators, okay? And you can probably see how, if I scan around the chart, all these different levels, as we look at price action over time, it's always reacting to these different changes in the VP. We can see how the candlesticks kind of fit in to the different shelves here, right? This retest here was off of this edge of the shelf. That's why I call it the VPE. This is something that really I arrived at after studying the market for years and years, guys. And it was fundamental to making me not just a profitable trader, but an extremely profitable trader. This is what made me a 7-figure trader. This is the thing that gave me confidence to leverage up. If you're somebody who's just doing the same position sizing all the time, it's going to be hard for you to make a lot of money straight up. That's fine as a beginner, but I want to get you to the next level. I hope you appreciated that. You should be looking for these setups on your own. If you want to figure out how to see these setups for yourself before they happen, join me on my absolutely free masterclass, October 30th, 7 p.m. Click the link down in my bio or just type in go.tradingwithforrest.com. Subscribe, hit the notification bell, tell your friends to join us at the webinar. It's free. I love teaching, guys. I love doing this shit. I love it. The whole reason I have all of this is because of trading. Okay, I love it so freaking much. I love it so much. It's the only thing that I've done every single day for almost 10 years now. And there's other stuff that I love that I have not done every single day. I'm going on a rant. I got to end this video. Join the webinar. I'll see you there. Subscribe. Deuces.